The QYLD, or the Global X Nasdaq 100 Covered Call ETF, is a unique investment vehicle designed to provide investors with exposure to the Nasdaq 100 index while also simultaneously generating income through the sale of covered call options. Now, this ETF has been popular for a while for more income-focused, dividend-focused investors, like myself, for example, and that's because the ETF seeks to distribute a lot of income on a monthly basis. But in this video, we are going to dig deeper into QYLD, and I'm not only going to share why I purchased personally a ton of QYLD over the past several years, but also we are going to seek to figure out if or if not QYLD could be the perfect investment vehicle for those more income-focused, dividend-focused investors in 2024 and beyond. Now, if you own any QYLD yourself or ever thought about it, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, heading over to the Global X website to learn a little bit more about QYLD. Now it says right here front and center reasons to consider QYLD as an investment. It says high income potential, which is again one of the main reasons and why I got interested in purchasing QYLD off the bat. It says QYLD seeks to generate income through covered call writing, which historically produces higher yields during periods of volatility, and we're going to talk a little bit more about that covered call writing in a second here. Now also QYLD does have monthly distributions and has made monthly distributions for 10 years without missing a single distribution. Now the monthly distributions, monthly dividends are also important to those dividend income focused investors like myself, because at least speaking for me personally, I like to get monthly distributions currently to reinvest that cash balance into more different dividend paying ETFs and stocks to really start the compounding snowball effect for my portfolio. But later on in my life, I want to have monthly distributions to help cover bills or just everyday life expenses. It also says efficient option execution. QYLD writes call options on the Nasdaq 100 index, saving investors time and potential expense of doing so individually. Now this sort of cancels out one of the main criticisms of some of these covered call ETFs. A lot of investors say, well, why would you invest into a covered call ETF like QYLD, like JETP, or like anything of the sorts when these ETFs do charge an expense ratio, like QYLD for example is 0.6%, when you could of course just buy the underlying assets and then write your own covered calls into yourself. And although that is good criticism, it's a lot easier just to buy a share at a time, especially for investors that might not have that much money, because buying directly into some of these indexes can get pretty expensive. But that does bring me into my next key point when it comes to QYLD. It does have a 0.6% expense ratio, which is pretty expensive considering if you're going to compare QYLD to some of the more index-based ETFs like VU, or of course SPY, they're not going to charge you even close to as much of an expense ratio. But keep in mind, because this ETF does have the covered call overlay, it is going to be a little bit more management intensive, which in turn you're going to have to pay for at least a little bit more. Now the net assets are currently around 8 billion, so this is one of the largest covered call style ETFs across the entire market, at least to my knowledge. So now looking into the holdings of QYLD. Like we talked about, QYLD does invest into the Nasdaq 100 index. So by buying into QYLD, you're going to have direct exposure to names like Microsoft, Apple, Amazon, Nvidia, all these high performing technology names like you see right here. But along with that, you also see that there is an upside cap, which means because this ETF also shorts the Nasdaq, specifically by using a covered call option, this ETF is basically buying into all these assets and then also shorting them at the same time, which does a number of various things. For one, it caps the upside potential. So if these names are going to rocket within the time frame of this option, which as right here, you can see the expiration date is coming up pretty soon here. Well, then in that case, the upside is going to be capped because a covered call only has an infinite amount of gain. In this case, the strike price is right here. Now, during this time frame, if these names were to go down, let's say, the short Nasdaq call option would of course help, because by selling a covered call, you're generating premium, which in turn is helping against downside protection. Now, I say all this just to say that if you want direct exposure to some of these top holdings within this list right here, names like Microsoft, Apple, Amazon, Nvidia, etc., and if you do not want to have a capped upside, well then buying into QYLD might not be the best option. But if you want to have exposure to these names with a covered call strategy that's generating a ton of premium on a monthly basis, well then QYLD might be your exact ticket. Now we can't make a fully comprehensive QYLD video without going into the price performance of QYLD long term, which on the max time frame, it is sort of grim. Considering back in December of 2013, QYLD was trading at over $25 per share, and now it's clocking in at just under $18 per share. So it is down around 28.6%, and we do see this across the board with a lot of these sort of covered call style ETFs. I've talked about this endlessly on my channel before, and you guys probably already know the drill here. But basically with covered call style ETFs, the upside is capped, which we talked about a minute ago, but unfortunately the downside is not capped, meaning that within a time frame, if the underlying holdings move up, the covered call ETFs are not really going to see all that much upside potential, but within a given time frame, if the underlyings move down, well then you are going to see some downside. But all in all, even though QYLD is down 28.6% as far as on the max time frame, as far as ETF price goes, this ETF does of course pay a ton in dividends, which I'm going to show you here in a second. So the dividends of course are going to make up for at least a little bit of it. And speaking of dividends, this is one of the main reasons why I decided to purchase QYLD years ago. And stick around because I'm going to show you my exact portfolio and share with you exactly how many shares of QYLD I have currently. But of course, the north of 10% yield that QYLD offers is very attractive to those dividend income focused investors like myself. And on the trailing 12 month currently, QYLD's offered 11.49%. So the dividend is still pretty hefty, offering $2.05 annually paid out over the last 12 months. Now looking at every single dividend that QYLD has paid since the inception of the ETF, the dividends have been relatively stable. As you can see, back a few years ago, there was 19-cent, 20-cent dividends. And then as of recently, there's been 18 cents, 17 cents. So although the dividends have not been necessarily the exact same over time, because again, with this style of ETF, you are not necessarily going to get the same exact payouts on a monthly basis because of the covered call strategy that this ETF employs. But relatively speaking, the dividends have remained quite stable. There haven't been any crazy dips in dividends or really anything of the sort, at least over the last few years. And again, looking at the grand picture, the dividends have been overall stable. But I think it's only fair that we look at what QYLD's performance has been over the long term, and this is with dividends included and without dividends included. So for example, if an investor bought $10,000 worth of QYLD at the start of this ETF's inception and reinvested the dividends along the way, this investor would have returned 98.3% as far as total return, and that's just over 10 years of time frame, or around 6.97% annually. Now without dividends reinvested, we're talking 60% return total and around 4.76% on an annual basis. So all in all, this ETF has had a positive net return on the long term if an investor was to have bought into it during the start, and that's back when this ETF was over $25 per share, which I guess we could say is sort of impressive. Although for investors like myself that were hoping to at least have more of a stable ETF price long term that didn't decay necessarily as fast as it has, and of course try to earn that estimated 10% in dividends per year, the 6.9% isn't necessarily the perfect annual average total return that we are looking for. Now, as you can see here, my dividend tracker, and side note, you can grab this same exact tracker to track your own dividends. It's the first link in my description. You can see that right here, number 8 on my dividend tracker is none other than QYLD with around 2,715 shares that I currently have at an average cost of around $19.77 per share. Now, if I remember right, I bought a majority of these shares back in like 2021, maybe 2022, and I have not purchased a single share of QYLD, at least to my knowledge, in well over a year now, but I have held the 2,700 plus shares that I currently have across my portfolios, which I am down a tiny bit as far as on share price, but again, I have earned around 10% per year as far as dividends go since I've held onto this position. And although this position has not been the biggest gainer, even with dividends in my portfolio, it really hasn't been too horrible, which is why I've held QYLD pretty tight in my portfolio for several years now. Now, with all my QYLD currently, if of course I'm looking at around a 10.9% yield on cost, I think I'm earning around $400 or $500 on a monthly basis across all my portfolios if you were to add up all the dividends. And again, this is all just estimated. Now, like I sort of touched on, I'm not reinvesting any money, even from dividends that I'm getting paid from QYLD, into more shares of QYLD. I'm reinvesting into some higher quality things, in my opinion, like SCHD, like Realty Income, or even Devo. And that's simply just because even though I don't think QYLD is the worst investment across the entire stock market by any means, I do personally think that there's better options out there, at least for my strategy moving forward. But when it comes to QYLD, the global NASDAQ 100 covered call ETF, I want to hear from you guys down below. Are you currently holding on to any shares of QYLD in your portfolio as of right now? And if so, how many shares do you have? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.